Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netease Cloud Music Inc. Annual Report. Netease Cloud Music Inc. offers a diverse range of businesses and services to its users. At the core of its operations is the online music platform, Netease Cloud Music, which provides users with access to a vast library of songs and albums. In addition to this, the company also offers various ancillary products and services, including Look Live Streaming, Shengbo, and Yinjai. The company's services extend beyond music streaming, as it also provides membership subscription options for its users. This allows subscribers to enjoy exclusive benefits and content on the platform. Furthermore, Netease Cloud Music Inc. engages in content sublicensing, allowing other companies to use its content on their own platforms. In terms of monetization, the company generates revenue through online advertising services on its platforms. It also sells digital music albums and songs, as well as virtual items in live streaming platforms. This diversification of revenue streams enables Netease Cloud Music Inc. to maintain a strong financial position in the market. Overall, Netease Cloud Music Inc.'s business model is centered around providing users with an engaging online experience through its various services and products. By catering to different needs and preferences, the company has established itself as a leading player in the music streaming industry. The significant increase in Netease Music stock price over the past year can be attributed to several key events and strategic developments by the company. One of the major factors was the partnership with SoundCharts in May 2025, which aimed to provide global professionals with insights into China's dynamic music market. This collaboration led to a positive market reaction, contributing to the parent company, Netease's slight gain on the day. The strong financial performance of Netease Cloud Music in the first half of 2025 was another significant factor. The company reported double-digit growth in its streaming and music subscription revenue, driven by a growing subscriber base and strategic expansion of relationships with copyright holders. This shift in focus towards the core music business contributed to the company's success. The recognition and outperformance of Netease Cloud Music by analysts also played a crucial role in the stock price increase. HSBC initiated coverage on the company, highlighting its significant outperformance compared to its competitor and the broader KWEB index. This analyst attention likely reinforced investor confidence, contributing to the stock's upward momentum. Overall, the combination of these key events and strategic developments has led to Netease Music's substantial growth in stock price over the past year. Netease Cloud Music Inc. maintains a market capitalization of $39 billion, broadly in line with the industry peer group. Netease Cloud Music Inc. trades at a lower price-to-earnings ratio of 13 times and a higher price-to-book ratio of 2.91 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, steady year-over-year expansion in active user base and increased subscription-based membership revenue have been key contributors. Amplifying offerings in signature music genres, collaborations with copyright partners, and online/offline artist-centric activities have also played significant roles. Furthermore, expanding exposure for musicians and their work, as well as enhancing commercial resources for them, have contributed to the growth. revenue from online music services has seen a notable increase of 12%, while membership subscription sales have risen by 13.3%. These factors collectively indicate that revenue growth is driven by user engagement, subscription-based models, and strategic partnerships. On the other hand, revenue decline can be attributed to several factors. A significant decrease in revenue from social entertainment services and others has been observed, amounting to -32%. Additionally, a reduction in promotion and advertising expenses, as well as an increase in government grants, have also contributed to the decline. Selling and marketing expenses, general and administrative expenses, and research and development expenses have all seen decreases, further impacting revenue. It is worth noting that certain factors, such as other income and other gains, net, are not significant enough to be considered drivers of revenue growth or decline. Similarly, changes in accounts receivable have been minimal, indicating a stable financial position. Overall, the primary drivers of revenue growth or decline can be summarized as user engagement, subscription-based models, strategic partnerships, and operational expenses. The net income of the company experienced a significant increase of Rm 1,180.4 million between two periods. This growth can be attributed to various factors, but the exact reasons are not specified in the provided summary. A closer look at the profit margins reveals that the gross margin has improved from 33.7% to 35.7%. This increase suggests that the company's ability to maintain costs and generate revenue has become more efficient over time. The improvement in gross margin is a positive indicator of the company's financial health, as it implies that the business is generating more profit per unit sold. The company's financial health has undergone a notable shift. A significant increase in total debt level is evident, with the total debt rising from Rm 1,630,064 to Rm 1,387,165 over time. This substantial growth indicates that the company has taken on more liabilities, which may have implications for its future financial stability. However, there is a lack of information regarding interest expenses, making it difficult to assess the impact of this increased debt level on the company's bottom line. Without this crucial data, it is challenging to determine whether the company's interest expenses have changed significantly or remain stable despite the rising debt levels. Management is emphasizing the company's commitment to enhancing music experiences and deepening user engagement. This involves expanding its distinctive content library, including original Chinese music and popular genres, to cater to diverse tastes. In terms of strategy, management aims to improve profitability through cost optimization and operating efficiency enhancement. This approach will enable the company to achieve a significant increase in profits by 2025, with an expected profit of Rm 745.8 million compared to Rm 565.4 million in 2024. There are no notable acquisitions or divestitures to report. The company has not engaged in any significant transactions involving the purchase of other businesses or assets, nor have they sold off any major divisions or subsidiaries. This suggests a stable and focused approach to business operations, with no major changes in ownership or structure. That concludes the financial summary for Netease Cloud Music Inc. Feel free to comment below, and I will be happy to answer them when possible.